Hi guys, good morning. Yes, good morning. I'm recording this in the morning. Right, so I'm going to go through chapter 7. We started talking about it last Friday, and I will just walk through it, and that's it. Get through chapter 7, and then try and get you to do as many questions. And yeah, let's take it from there. Let's go. So really, I sort of kind of highlighted the fact that we're dealing with a situation where sole traders will prepare their own accounts because that's what they do, and they'll set it up in the years that fit them and as they would like to run their businesses. Maybe their businesses are busy at Christmas and they'd like the year end to be at Christmas. I don't know. But the key point is they're free to do as they wish. But of course, the government would like their taxes, and the government would need we would need some rules as to guide these businesses, if you like, as to when to pay tax, as to how to pay tax, and penalties and that sort of thing. So so it's fair enough that you make your own business dates, but you have to abide by the Finance Act. And the Finance Act has the financial year as the 6th of April to the 5th of April. And the fundamental rule is that you'll be judged in the year in which your financial accounts end. So for example, if your financial accounts end on the 31st of December, you will be judged in the Finance Act of the following 5th of April. So it's always after your year end. So if your year end is the 28th of February, again, it's just the 5th of April, the following 5th of April. That's the year, that's the Finance Act sort of guiding your year, right? And that's kind of the fundamental principle that we start with. Right, let's go. So I'll break this up into two. I'm going to make them short, and again, I'm not going to go on for long. When I say make them short, short videos, so that you are able to just kind of make sure you are still awake when you're doing it. So we're looking at a couple of things. Typically, of course, we're going to be looking at new businesses because that's pretty important, right? Because we're really interested in how a new business comes to you, a new client comes to you and says, "I want to prepare my accounts," or I've started trading. Now I want to pay tax," or "What do I do?" And you have to kind of guide them as to what's going on. So really, the first issue is this whole idea of the so they start off with the ongoing rules. I actually prefer to well, I mean that's kind of what I was saying earlier on. That the profit for a tax year are the tax adjusted trading profits. When we say tax adjusted trading profits, we mean, if you remember, your trading income minus your capital allowances, right? So we've done capital allowances now. So your tax adjusted trading profits for the 12-month period of accounts ending in that tax year, right? And this is referred to as a CYB. So that's exactly what I was saying. So the we sort of did this first one, and we sort of talked about this, right? So 30th of September, of course, will be, and 30th of September 2016 will be in the year, if you like, 6th of April 16 to the 5th of April 17. Okay, right, good. So the big one, the first one, which I'm going to do in this first video. So I'm going to make them in that's the order I'll make them. The opening year rules. Like I said, it doesn't matter when you start your business, the way the rules apply, you must always end your first year for the 5th of April of the following 5th of April. So for example, just to make it real, if you start your business on the 1st of January, just like what they've done in 2017, your very first period will end on the 5th of April 2017. That's just it. So you have, if you like, a 3-month period. So the opening year will always end by the 5th of April. And that's pretty much the situation, right? So you might have prepared a 1st of January 2017 to the 31st of December. You might have prepared a 1st of January. Sorry, let me rephrase that. This will help me for my next video. You might have done a period for the 1st of January to the 31st of December. You might have done a period for the 1st of January 2017 to the 30th of June. This is your first period, but your first, if you like, assessable tax will take place prior to the 5th of April. So let's carry on. So kind of doing this, let's just look at a question, because all of this is very much about questions. We'll look onto the general broadsheet in a second, but here it is. Here's what I've just talked about, and in my this first tax year. The question here is we're dealing to the 5th of April, and so what we need is an example. I'll come on to what happens. So here we are. Here we have a business, and it tells us very clearly that this guy, Jenny, commences trading on the 1st of January, prepares her first salary, so the 31st of December. So what are they telling us? In the first tax year, we're going to be going from the 1st of January 2017 to the 5th of April 2017. So it tells us that she does 12 months, 12,000. So that's 3,000, isn't it? So 3,000 will be assessed at the 5th of April. You see, because there are rules that apply. Tax is paid on the 31st of January following the end of the tax year. Right? We're going to see that. So this means the government can get some tax on this straight away, as opposed to saying, if you're a company, it's different. But if you're a sole trader, stop there. Right? Stop at the 5th of April. Okay. Right. So that's the first video, and I think I want to keep it like that. And then when we talk about the second video, we'll talk about what happens in the second tax year, which is pretty much the critical year. Once you've done the second tax year, on some occasions you might have issues in the third, but typically by the second tax year, you're sailing by then. Okay, great stuff. See you in the next video.